Good morning. Happy Friday, the 19th of February. God, how do we get so far? And it's half term apparently as well. Having my youngest at university now, I've completely forgotten when terms start and finish and do whatever they're supposed to do. Not that it makes any difference because everybody's homeschooling anyhow. How are you all managing with your homeschooling? I hope you're okay. I'm so pleased that my children aren't that age anymore. I think I probably would have committed a murder during one of the lockdowns by now. Anyhow, Friday. It's Friday again. Now, for anybody who is doing my Profit First courses, that means it's our allocation day. Yippee! It's so exciting. It also, in my case, means that it's the day for sorting out all of my finances, going through who owes me what, going through all my quotes, making sure I'm chasing them all up, making sure everything's all set for next week. Now, as you can see by the banner along the bottom, next week is terribly exciting because we have my 5 steps to increase profit challenge starting on Monday. If you want to join, mention in the comments, hi, it's me. Hey, Carrie, I hope you're okay. I hope Jack's okay going to the vet. If you want to come and join my challenge, anybody just mention, put the word profit in the comments and I will PM you. So look out for a PM if you're wanting to join it. There are lots of exciting bonuses and prizes and all sorts. And it's going to be really exciting because you're going to really focus on your business. You're going to focus on what profit means and what it doesn't mean. And I'm going to give you some really easy little tips. And I know that profit frightens people. I know that finances frighten people, but I'm going to do it in a way that is not frightening. I'm going to do it in a way that is jargon free. And it'll probably take you about 15 to 20 minutes a day to do, that's all. And by the end of the week, 1, you could have won some serious prizes, depending on how much you engage in the group. 2, you could actually have found some serious ways to increase your profit, which means that your business could start to be profitable or could really increase the profit that it's making. Imagine what that would be like. What would it feel like to be in control of those finances, to really be able to focus on them and actually not be scared of them? Anyhow, it's not what we're talking about today. Today, we are talking about the 10 biggest profit mistakes that entrepreneurs make. These are crucial because they are all part of how not to run a business, basically, and how not to be as how to be as profitable as you possibly can, which is what we all want to do. So making profit is the financial point of any business. Without it, there is no business, basically. And whatever else you're hoping to achieve through your business, whether you're helping people, whether you're changing the world, whether you're supporting your family, whatever it is that you're doing, none of that is going to be possible if you're not profitable. Now, profit, I know, scares a lot of people because they don't really understand what it is, but we'll go through that if you're joining the challenge, so don't worry about it. But in my experience, far too many entrepreneurs don't actually really understand what profit is and, more importantly, how to ensure that they make it. So we have 10 of the biggest mistakes. Mistakes is a bit much, but I couldn't think of another word. 1, bank balance accounting. What is bank balance accounting? Well, as a business owner, no doubt you've heard the phrase cash is king so many times that actually it started to feel like more likely that cash is your profit. It's not. So then you start to gauge your profitability of your business on how much is in your bank. And that's usually how you pay your expenses, your overheads, your suppliers, etc. You look at what's in the bank, you think, okay, fine, I've got that in the bank, I'll pay it. Nah, big mistake. Big mistake. There are 7 reasons, on top of the 10 biggest profit mistakes, there are 7 reasons why you might actually be making a loss in your business despite the cash in your bank. Get that, okay? 1, you have not paid your suppliers or your other creditors yet. You have received an advance cash from your customers, so they've paid you in advance maybe. You haven't accounted for your payroll expenses. Now, that's not necessarily just payroll expenses. That could be your freelancers, etc., your subcontractors, anything like that. But payroll expenses also means the tax that you have to pay on your payroll expenses. So your employer's national insurance, if you are an employer, and your employee's national insurance and tax as well. You're not paying yourself a realistic salary. That's massive. That is massive. If you're not paying yourself what you deserve, then how can you have a profitable business? It's one to think about. You haven't made any adjustments for all of your expenses that you might need to. You have not taken any dividends if you're a limited company. All the cash is from last year's profits. It's not an exhaustive list by any manner of means, but it covers the common areas where your cash will go. So the next time that your accountant presents you with your accounts with less than expected profit figure, actually have a conversation with them. Go through the list above and together go through those factors and find out what, depending on your specific business and your sector, depending on where you are, talk to your accountant. We are not all scary by any manner of means. And sometimes I know you don't know what you don't know. So you don't know what to ask. I get that completely, because there's a lot of things in my life, not accounts, hopefully, but there's a lot of things in my life that I don't know what questions to ask. So I just keep stum. And it's scary. It is scary. But actually, the more questions that you ask, the more you're going to find out, the more you're going to understand about your numbers. The more you understand about your numbers, the more you're going to understand how to start making that profit. And that's what we're aiming for. So number 2, sorry, we've already been going for 6.5 minutes and I've been talking rubbish already. Margins. God, they're so important. This is a really important indicator to your profitability. It's hugely ignored, actually, and quite a lot misunderstood. Next time that you get your accounts, whether you're just looking at your profit and loss on your Xero or your QBO account, if that's what you've got, take the direct cost of sales or your direct expenses out from your revenue. Divide that number by the revenue. That is your gross profit margin. Okay? Let's say that your revenue is £1,000 and your materials or your direct labor or your direct expenses, whatever you call it, your cost of sales, are £700. The difference is £300. Divide that by £1,000, which is your revenue, gives you a margin of 30%. Well, that means that's okay. So that means that for every pound of sale, you are making 30p in your gross profit. Okay, that's fine. This tells you how profitable you are at the gross margin level. You can also compare this to this 30% to your industry standard, your industry average, to gauge where you are. But this leads on to number 3, which is the wrong calculation of price. Having ascertained that your profit margin is 30%, let's go with the 30% because those are the figures that we've used. A common and very big mistake that I see is that you go and see a new project. You quote for a new job, new service, new product, whatever it happens to be. You take your cost, let's say they're £1,000. What do you do next? You apply the 30% of your gross margin to those costs, and you quote £1,300 for the job. Sounds familiar? Yeah? Okay, fine. So, well, it's not actually quite right, that actually, because if you take your £1,000 cost from the £1,300 revenue, you get £300. Divide that by the 1,300, which is your new sale price as such, and you now only get 23%. You've just lost 7% profit margin. Now, if I was you, I would listen to that over again because it is absolutely crucial. You have just lost 7% of your profit margin without even blinking because you've worked it out slightly wrong. And this mistake is going to make its way down to the net profit figure, which is what you're taking home. So it's crucial. Number 4 is fear of price increase. This is very big. So once you've realized that you're underquoting for a lot of jobs, or that your jobs, your costs have gone up, another very classic mistake is to put off the price increases because you think you're going to lose your customers. So, okay, let's just do another quick little calculation. I'm trying not to keep this too overcomplicated. Okay, let's say that you've got 20 customers and your price is £1,300 per customer. Okay, so that would give you £26,000 in revenue. If you put your prices up by 10%, just 10%, your new revenue is going to be 28,600. If you lose 10% of those customers, i.e. 2 at £1,300, that's 2,600, your revenue will revert to the £26,000. But you've got 2 fewer customers, less resources needed to serve those remaining customers, and depending on how you approach the price increase and how you communicate it, you may also be very surprised that actually you may lose it less than that 10%. So 10% increase, could you do that in your business? I bet you could. Number 5 is crucial. Actually, they're all crucial, really, but as a combination, cutting the wrong expenses. Cutting the wrong expenses. You realize that your cash at your bank isn't yours and set aside for other reasons to pay your expenses, etc., etc. So panic sets in a little bit and you're determined to cut those costs. Not all expenses will have the greater impact on your profits. A study by, my brain's gone. What are they called? Global consulting firm, McKinsey & Co. That's it. Revealed that whilst a 1% reduction in fixed costs can have around a 2% increase in profit, the same reduction in your variable costs can actually have a bigger increase of 7% in your profits. So instead of going for cost cutting across the board, sorry, it's a bit of a pun that, conduct a cost benefit exercise. It's much more important. So just to remind you, your fixed costs they remain the same regardless of the output. So they're things like your rent, your insurance, your interest, your stationery, stuff like that. Your variable costs vary based on the amount of output. So they might be your direct labor, if you're paying on an hourly rate, your freelancers, your raw materials, things like that. Okay, what are we on? Number 6, aren't we? Ignoring the power of one. This is crucial too. Incidentally, the same studies, the McKinsey & Co. ones, revealed that increasing your pricing has a bigger influence over your profits than reducing your costs. Or increasing your sales volumes. That's interesting, isn't it? So what most entrepreneurs do is they don't consider doing is assessing the power of a mere 1% increase. 1% increase in sales, 1% decrease in your variable cost, and a 1% decrease in your fixed cost. The next time that you sit down with your accountant, ask him or her to run these numbers and show you the impact it'll have on your profits. Would you lose a lot of customers if you just increased your profits, increased your sales prices by 1%? Bet you wouldn't. Bet they wouldn't even notice, half of them. Okay, labor costs. If you've got staff, this is number 7. A very common profit mistake is not measuring your revenue per staff or your profit per staff. This is simply taking your revenue or your profits per year and dividing it by the number of staff that you have. Let's assume your income is, let's say, 100,000. You've got 4 members of staff. Your revenue per staff is £25,000. Now compare that to the average cost per staff. This simple exercise will really help you focus. And you obviously can do it with freelancers as well. But don't forget, when you're doing it with your staff, you've also got to include paying for your employer's national insurance, etc. Flying blind. Ooh, okay. Peter Drucker. I never know how you pronounce his name. He's a management guru. Anyhow, amazing management guru. He's often quoted as saying that you can't manage what you can't measure. You can't manage what you can't measure. So when it comes to profits, the biggest mistake is not knowing the profit numbers that matter, the ones that really matter in your business. Your gross profit margin, your profit per staff, your profit per client or project, your net profit margin, your break-even point, your monthly costs, and your prices are all the important numbers. There are others as well. Your gross profit, your operating profit. What's the difference between those two? A lot of difference. Come and talk to me and I'll tell you. if you currently, if you speak to your accountant once a year, only to be told how much tax you've got to pay, and there's no access to these key numbers, then you're unlikely to understand what the numbers are, and you're unlikely to even want to know what the numbers are. But if you do want to know what those numbers are, then you need to actually ask your accountant. That is one of the things, as I said at the beginning, I know it's scary asking your accountant things, or sometimes you don't know what to ask, but actually in this particular case, you do know what to ask. What are these numbers? What do they mean? What do they mean for my business? What do they mean for my business going forwards? Because it's all very well knowing the numbers as you are at the moment, your current numbers, but it's actually the ones going forward. Anyone who works with me now, with the business advisory work, not just the compliance work, they get these 7 most important numbers. They are absolutely crucial. We then work out your cash flow forecast. Sounds scary, but actually it's not, because it shows how much in control of your numbers you can be. Anyhow, sorry. Let's go on. Flying bind. Yeah. So with the influx of all of the cloud accounting systems like Xero and QBO and Free Agent and all of the other ones, you actually got no excuse now. You can see all the numbers. You may not know what they mean, which is why you need to ask your accountant, because it's so important. So number 9 is price your competition without a plan. I think a lot of people look at their competitors' prices and they undercut them in order to win the business. But often this is done without a plan. It's done on a sort of short-term basis. So short-term, low-cost sort of strategy thing. In the long run, which is what you really need to be looking to, you need to win more business. You find yourself not making the profits because of your cost. And so therefore, you need to actually not compare yourself to other people. It's difficult to do. I know it's difficult to do. When you hear that somebody else is selling what seems to be the same sort of thing as you, then you automatically want to reduce your costs in order to win that business. But actually, is that the best way of doing it? No. The best way of doing it is to overprice them, go above them, but to give more and more and more value. Not undersell yourself, not keep offering things for free, but offer people more value. It is crucial. And number 10, and I would say this because I'm a profit first professional, is not taking your profits first. In Mike Michalowicz's book, which you can see behind me, Profit First, he makes a very compelling case for opening bank accounts, more and more and more bank accounts. It's one of his sayings is, if in doubt, open an account. And what he does is he suggests that if you're running the Profit First system, which is a cash flow management system, which I'll talk to you about if you want to join the challenge, as per below, is that you have predetermined percentages which you put into different accounts. So you've got your profit account, you've got your owner's pay account, you've got your tax account. If you're VAT registered, you've got your VAT account. You can have as many accounts as you want to. I have a payroll account now because I've got staff as well. I also do this in my personal life as well. So I have one for my holidays. I have one when we can eventually go on them again. I have one for my daughter at uni so that I can start paying her deposits and things for her house that she's going to be taking next year. Stuff like that. I also have one for education, and I also have one for lifestyle, because I want to be able to do the fun things like go and have a massage once we can, go and have my nails done, which clearly haven't been done for a very long time, go on a retreat, and the money is already put aside. Using Profit First can make an enormous difference, 1, to your business, but 2, to your home life as well. So if you want to know more about this, then please do contact me, because I'm running courses on this. My next course starts on the 8th March, 6-week group coaching course. It's going to be very, very exciting. And it's not just on Profit First. It's going to be on increasing your profits, full stop. However we're going to do that. So anyhow, I've spoken for quite long enough now. So the conclusion to all the profit mistakes that we're all making them. But you've got to remember, profit is like oxygen. Your business cannot hold its breath for long without. This is not my quote. This is why I'm reading it. Your business cannot hold its breath for long without it. So it's essential you understand what profit is, how your business makes it, and what impacts your profit. By understanding these key basics, you can focus on increasing your profit And that means more money for you, more money for your family, more money for the lifestyle that you're wanting to live, more money for saving up towards that house that you want to buy, saving up towards that amazing holiday, saving up for whatever it happens to be, just paying yourself. It doesn't matter what it is. It's for you. It's your reward. That is what profit is. So if you want to come along and join the challenge on Monday, there's lots of pre-challenge stuff going on. So the sooner you do it, the better. The sooner you sign up for it. Please come along and join me. Now, I've waffled on for quite long enough. I hope this has been useful. And if anybody wants to talk to me, I'm always here to help. So please get in contact. Have a lovely weekend. Bye.